Hello students, how are you all? I hope you're keeping fine in this pandemic situation and all your family members are also fine. So let's start the video today. In this video, we are going to know about the general principles of accounting. Or few accounting concepts. Now many of you are staying at home and we are wondering as to what is accounts for students who have taken up commerce in class 12, 11. So you must be wondering as to what is accounts, what can I do to improve my accounting, and we have few concepts which are not clear to us. So in this video today, we are going to clear up all your concepts and I'm going to give you the basics of accounting. Now, what is accounts? Why do we need accounts? Basically, why do we need accounts? See, accounts is present in all our lives. It's there in a simple life, but it's just that we have to identify it. Let me give you an example. For example, your mother gave you 100 rupees as your pocket money. And for the month, what you have done, you have spent rupees 80 for buying chips, chocolate, pens and whatever you require, and 20 rupees you have saved for yourself. So at the end of the month, what you will do, you are doing your calculations that 80 rupees I have spent for this and this, and 20 rupees I have saved. So you are getting a total calculation of rupees 100. So this clear statement is called accounting. Like for you, I gave you an example of rupees 100, but for huge, big companies, there are lots of transactions, monetary transactions that goes on. So for that, we need to record it in few sets of copies, or we need to record them in a chronological manner. That is called accounting. Now let me give you the definition of accounting. Now, accounting comprises of recording, summarizing and analyzing the monetary concepts. That means whatever monetary transactions we are having, first we have to record it, then we have to summarize it, lastly we have to analyze it. All the monetary transactions of a business, of a firm or for an individual is called accounting. Now here I use the term transaction. What do I mean by transaction? Transaction is any record that we are having, any giving or taking of money is called my transaction. If money is going out from me or money is coming towards me, then that will be called a transaction. But it can only be called a transaction when it is related to monetary terms. So let me write down here. So I have given you the two concepts, that is accounting and transaction. Now coming to the sequence of accounting, how we will carry on with the process of accounting. First let me say you, firstly we have to do journal, then we do ledger, then we do trial balance, lastly we do final accounts. Let me write down here. First is ledger, journal. Next is ledger. Third is trial balance. Fourthly, final accounts. Now, firstly, coming to journal. What is journal? Journal is recording your transactions in a chronological order. Now, what do I mean by chronological? Chronological means in the series of date as it is occurring. Okay, so maybe on first you have recorded one transaction, so the next transaction will be on the second date. If there is no transaction on second, then the next transaction that comes in, so you have to record one by one, that is from first, second, third, fourth, and so it will carry on. You cannot just haphazardly record the transactions. That is not chronological order. So we have to record all the transactions in a chronological order. That is called journal. So after my journal is complete, my first step is complete. The next thing I'm going to do is ledger. What is ledger? Ledger is nothing but whatever we have recorded in our journal, we will cross-post it in the ledger account. I will give you the details of ledger in some other videos. But what is ledger? Whatever we have recorded in our journal, we will cross-post it into the ledger accounts. This is over with the second step. That is, ledger is over. Next, we will come to trial balance. What is trial balance? Trial balance is segregating all the transactions or all the accounts that we have prepared in ledger. We will segregate that into debit and into credit. And my debit and credit will tally. Now here there are two concepts that I need to explain, that is debit and credit. I'll come to that later. And if my trial balance matches, that is all the total of debit matches with the total of credit, that means my calculations are correct or my recordings are completely correct. Next, coming to final accounts. Now final accounts have three parts: trading account, profit and loss account, lastly balance sheet. For trading and profit and loss account, you have to record the transactions and segregate that. From trading account, you will get gross profit. From profit and loss account, you will get net profit. And balance sheet, what you will do, you will segregate that into assets and liabilities. Now, what is asset and liabilities? That also I will explain. Now, as I told you, debit and credit. What is debit? What is credit? Now, debit means whatever things are coming in. For example, debit and credit, like these are two sides of a coin. Okay, like a coin has two sides and you cannot skip or omit any part. Similarly is debit and credit. For example, I say your mother has given you 100 rupees to buy 2 kgs of potato. What you have done? You have taken the money and you have gone to a potato seller and you have purchased this 2 kgs of potatoes. What you have done? You have paid the money, right? So for your mother, there are two transactions, debit and credit. Money is going out, potatoes are coming in. Money is going out, potatoes are coming in. Similarly, for the potato shopkeeper, there are also two transactions. What? Money is coming in, potatoes are going on. Just the opposite to your mother. Why? Because your mother is buying and the shopkeeper is selling. So for your mother, money is going out while potatoes are coming in. While for the shopkeeper, money is coming in and potatoes are going out. So as I told you, debit and credit are two sides of the coin. You cannot skip one or you cannot ignore the other side. Similarly is debit and credit. They are like the two sides of a coin. Now coming to the aspect of what I told you here, yes, assets and liabilities. What are assets and what are liabilities? Now assets are anything that you will get the benefit in future. Like you must hear that your mother or your parents say, let's buy a flat or let's buy an apartment, let's buy a car. This will be an asset to us. Or your parents must be saying, you study well, these certificates are your assets. What do they mean by that? By that they mean that these certificates that you are obtaining, or the car or the apartment that you are buying, this will give you benefit in the future. That means if you sell the apartment or if you sell the car, that means in future you will get a good lump sum amount of money from that. As for certificates, why are they assets to you? Because with the help of certificates, you might get a job, and definitely that job will be beneficial to you. That job will earn you better salary. This is why these are your assets. You're gaining knowledge. These are your assets. So, asset is anything that will give me future benefit. Then, what is liability? Liability is something for which my assets are compromised. That means which I have to pay in future. Okay, it's just the opposite of asset. Liability, what is liability? Liability is anything that I have to pay in the near future. For example, you have borrowed 1000 rupees from your friend. Now you are very happy that I have 1000 rupees and you are ready to spend it. But later on, maybe after a month or two or after a year or so, you will have to repay this back. You have to repay this back to your friend. So this is a liability to you. This is a burden to you that yes, I will have to repay this back. So this is liability. Now coming to final accounts, I have given you three concepts, that is three parts are there in final accounts: trading account, profit and loss account, and balance sheet. Now trading account, as I told you, from trading account we will obtain the gross profit, which will get transferred to our profit and loss account. Now with the help of this gross profit, we will calculate net profit, and from this net profit we will obtain balance sheet. Now, balance sheet is a financial recording of it actually gives you the clear statement or the complete financial record of the company or of the organization. What it is all about. Where are we lacking? How much assets do we have? What is the liability that I have to pay? This is all about my balance sheet. So from if you prepare all these four, if you know how to prepare all these four, then you are good or well to do with accounting. Now coming to the concepts, there are three accounts that we can prepare. Talking of the golden rule, the three accounts are real account, personal account, and nominal account. Let me write down here. I'll just erase this. Now coming to the three accounts that we have. So the three types of accounts that I am talking is, first is real account. Now what is real account? Real account is any account that is opened to record assets or properties. Now I already gave you the definition of assets, what they are. So we can record building, machinery, or car, motor vehicles, any other assets that we have, we will record in the real account. This is prepared to record all the assets or properties. Now coming to personal account. From the very name personal, you can understand it is opened in the name of a person. Personal account. So personal account can be in my name, can be opened with your name or Ram name, Mr. Ram account, A account, Mr. B account, Mr. Z account, and so on. So this is personal account. Any account which is opened in the name of a person. Next we come to nominal account. Now what is nominal account? Nominal account is any account which is opened to record the income and expenditure. Income and expenditure what I mean by that is whatever money is coming in is my income, and whatever expenditure or expenses I am having, I will record that into nominal account. So nominal account examples can be wages, salary, rent, because all these are expenses, money is going out, so I can classify them into my nominal account. So real account, personal account and nominal account. I will repeat this again. Real account is opened to record any asset or property. Personal account is opened in the name of a person. Nominal account, this is opened to record the income and expenditure. Now I will give you few examples and you have to classify them into real, nominal or personal. See, Mr. A account. You can identify from the very question here. Mr. A is a name. So it will be real, personal or nominal. Definitely it will be personal. Why? Because Mr. A is a name of a person. So we are opening the account in the name of the person, so it will be personal account. Next is buildings account. Buildings, as I told you, it is an asset. So since this is an asset, this will fall under real, personal or nominal. This will fall under real account. Next is salary account. Salary is expenditure. So I told you for nominal account, we record all the income and expenditures. So salary account will be nominal. I can give you various other examples, rent or office expenses, electricity, all this will come under nominal account. So these are the few concepts I have told you. Now coming to, there are few other concepts also, like the golden rules. Many of you must already be acquainted with golden rules, but I will teach you one Pearl's rule here. Okay. Now we already know the golden rules, that is debit what comes in, credit what goes out, and there are three rules of golden rules. Definitely that is very good. The name itself is golden. You know already gold, old is gold. So definitely if you follow golden rules, definitely you will be benefited. Your sums will never go wrong, obviously. But golden rule is time taking. It is time consuming. And as you know, there is very limited time to finish our paper. We have to do it very fast. We do not have endless time to finish our paper. So definitely if we follow the golden rules, I'm saying you it's always best. It's the best of best. But since it is time consuming, I will teach you or I'll introduce to you one new concept. This is a very important concept and this is followed in various institutions. In ICAI also this concept is taught. This is called Pearl's rule. Pearls. Now Pearl's rule, I will say you, obviously it's a very good rule and it's very innovative. It's a very creative rule. Definitely. But it is the benefit of it is not similar to that of golden rules, but definitely this will fetch you correct answer. This will never give you wrong answer. But it is the benefit, as I'm saying you, is it will take less time. So if you do golden rules, you will take a little bit time. It's time consuming, but the concepts will be quite clear. But Pearl's rule, if you understand the rules, if you understand the concept, and then if you follow Pearl's rule, then definitely you will be very benefited, because that will consume less amount of time. And definitely if you know, if the rules consume less amount of time, we will be able to finish the paper fast. So let me introduce the concept to you, pearls. Pearls. We will divide that into three. That is pearls. Now let me write what is P. P stands for purchase. Okay. P stands for purchase. E will stand for expenses. A will stand for asset. Coming to R. R will stand for regular income. L will stand for liability. And S will stand for sales. P for purchase, E for expenses, A for asset, R for regular income, L for liability, S for sales. These are the full forms of pearls. Now, defining how this we will carry on with the transaction. PEA increases, we will say that debit. Okay. PEA decreases, we will call that credit. PEA increases, we will call that debit. PA decreases, we will call that credit. Purchase increases, debit. Expense increases, debit. Assets increases, debit. If it decreases, if purchase decreases, then credit. If expenses decrease, then credit. If assets decrease, then credit. Coming to RLS, this is just the opposite of PEA. That is, as I told you, if PEA increases, it will be debit. RLS, if it increases, it will be credit. If it decreases, it will be debit. RLS. R is regular income, L is liability, S is sales. So regular income increases, it will be credit. Liability increases, credit. S or sales increases, it will be credit. If it decreases, regular income decreases, it will be debit. Liability decreases, it will be debit. Sales decreases, it will be debit. So from this you can categorize, or for your journal entry I will say you this is the best concept you can follow. Because for like golden rules we were thinking so much as to what it will be, debit what comes in or credit was what goes out. We have to categorize it, think accordingly. But for this we don't require to think at all. You just put it in this formula of PEARLS and definitely it will be as clear as water. You can understand purchase, expense, asset, regular income, liability, sales. Whatever question comes, you can categorize them into these 6 elements: PEARLS. So definitely the answer is clear to your eyes. If it's purchase, okay, purchase is increasing, then definitely if purchase is increasing, then debit. Okay, now this is sales. This is talking about sales. Okay, if sales is increasing, then it will be credit. So this is so clear. It's so very clear. It's not like golden rules which we have to think so much. So these are the few concepts I have introduced to you. So what I will say is follow this video. This is a very nice video I have made. We are giving the introduction lesson to you all. So this is quite beneficial for especially people who are sitting at home and they are wondering about what accounts is, how we will carry on with accounting, and there are few words and terms which you don't understand, like accounting, transactions, debit, credit. So these are the concepts that I have explained you. There are many other concepts also, like I can give you the definition of journal, ledger, why this is done, or cash book. There are various chapters. Then BRS or bank reconciliation statement, profit and loss, what is profit, what is loss. So all these concepts will be introduced to you in some other video definitely. This is not possible in one single video. It's a huge thing. So what I will advise you is follow this video. I have given you the introduction of accounting, transaction, sequence, Pearl's rule, and the three types of accounts that we usually make. So definitely this is a very good video. I will advise you, if you're wondering to take accounts, or if you have already taken this, follow this video and definitely this will help you a lot. So I hope this is quite beneficial to you, and I would like to conclude my video here. Just stay happy, stay fine, take care of your family. That's all we can hope and wish for. So just stay happy, and thank you.